Yo, what's up, guys? Let's get into the news today. Despite the bullish week, Bitcoin is facing a death cross. Bear market officially starting. I think this is a little bit ridiculous. We have been in somewhat of a bear market, I guess. Definitely hasn't switched to a bull market yet, so that title is a bit clickbaity. So let's see. As Bitcoin continues to struggle to maintain $6,000 price area, the formation of another technical pattern is raising some concerns. The cryptocurrency charted a death cross, which is something that should be taken into consideration. Of course, as long as you follow technical analysis. Now, I don't follow technical analysis, but for those of you who do, this is what we're talking about. After this, I will give you some fundamental analysis based on what I think. So, the third death cross since 2008 incoming. First thing first, it's important to note that a death cross is a commonly referenced technical analysis setup. It occurs when the 50-day moving average line crosses below the 200-day moving average line. Death crosses took place only a few times in the short history of Bitcoin. This particular indicator usually a telling sign that a bear market is underway for mid-longer term. Okay, so with the upcoming economy the way it is, like I said yesterday, I am pretty sure that this printing of money and this putting the economy up on stilts and trying to just pump it full of printed cash isn't going to be sustainable, especially when we're getting reports of like 3 million people jobless or unemployed. And the numbers just keep stacking up. So, and it doesn't look like it's going to end anytime soon. So, yeah. So, however, the cross is usually a lagging indicator, meaning that the asset might have already seen part or most of the fall before the death cross took place. Very TA of you. In the short history of Bitcoin, there were two major death cross occurrences, which took place in April 2014 and March 2018 to indicate the beginning of a bear market. The bear market of 2014 and 2015 each lasted about a year and ended officially with a golden cross, which is opposite of a death cross, when the 50-day moving average crosses back over the 200-day moving average. So, here's this chart for, again, those of you who like technical analysis. This recent death cross are the recent death cross occurrences. As you can see, the next arrow up from the left indicates the golden cross. Sorry, let me start from the top. The 2018 death cross is the first down arrow from the left on the following chart. So that would be over here. As you can see, the next arrow up from the left indicates the golden cross, which took place in April of last year. Bitcoin was trading around 5,400 on that day. However, just 2 months after, the cryptocurrency had recorded its 2019 peak at 13,880. The next death cross took place in October 2019 to indicate the end of the 2019 bull market. Again, I wasn't aware that we had a bull market in 2019. However, on that day, Bitcoin wasn't updated about the bearish indicator and went on one of its best ROI days in history, surging 42% in just one day. However, there was a serious catalyst back then as Chinese President Xi urged the country to spend more efforts on blockchain-based technologies. As you can see, the golden cross, which took place just a month ago, turned out to be a fake out following today's death cross. This phenomenon took place during 2015 as well, the real golden cross, which led to the 2017 bull market and Bitcoin's all-time high of nearly $20,000. What to expect? Bitcoin's price action has been particularly tumultuous throughout the past few weeks as the entire market was sent into massive volatility amid the coronavirus financial crisis. Death cross most of the time indicates entering a bear market. This comes in line with horror expectations from Bitcoin to bottom below 3,700. However, as the above chart suggests, there might be a fake out. And Bitcoin is also facing its first financial global crisis in its history. This might affect the situation. So far, Bitcoin has demonstrated an almost identical correlation with equity markets. So that would suggest that it is a correlated asset. However, it could be correlated right now, but I believe that there's a lot of this, and even things that I'll be going into today talk about just things because our market is immature. So anyway, like I said before, I am not a TA person. I don't believe TA is accurate, especially when markets are this small and so easy to manipulate from one whale. So, there's very, very, very few people who actually make money using technical analysis. And most people who say that they do, don't. So that's that. But with that being said, my fundamental analysis, what I believe, is that we probably are going to move down from here with Bitcoin price. I mean, I'm not sure in the immediate short term, but I believe that coming up, I don't know when, in the next, could be soon, could be tomorrow, could be 2, 3, 4 weeks from now. I don't know. That's why I said yesterday, just be cautious, because I think as the traditional financial markets do dump, and they will, a lot of people will also sell their crypto and flee for cash. And then I think I said yesterday, I think that we'll see a significant rise back up. Next up, Indian tech giant Mahindra speeds up cross-border transactions with blockchain. Tech Mahindra, the IT subsidiary of Indian conglomerate Mahindra Group, has become the first Indian business to use R3's blockchain-based Marco Polo network for conducting cross-border transactions. Watch out, Ripple, XRP. This is interesting though, because I think that a lot of people feel like there's going to be one main player that does these things that they're promising to do. People think that XRP is going to be the cross-border bank-of-bank platform that might disrupt SWIFT. But we have a whole world and tons of businesses and banks and institutions and retail traders and blah, 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 that all of them can be using different types of protocols that all kind of do the same thing, and they all can survive and thrive and do well. So this is R3 making their splash into the cross-border transactions and payments. And what it's going to come down to, in my opinion, is that it's just going to be like whoever talks to the people first and makes a compelling case. This is a game of sales, and as you come to find out in this article here, as I read a bit further, this Mahindra is fairly new to blockchain and crypto, and so my assumption would be that R3 was the first people to talk to them about this. Keep reading. It said the platform had resulted in faster reconciliation and ambiguity resolution, as well as a significant reduction of paperwork and time required for the entire transaction cycle. Well, that's good. Paperwork is a bitch. Okay, Tech Mahindra partnered with Singapore's DBS Bank, which facilitated the transactions and acted as the company's leading trade bank. The parties used Marco Polo receivables discounting product, which is designed to help companies optimize their working capital, improve liquidity, and mitigate credit risk. Marco Polo is a consortium of major global financial and banking institutions that aims to streamline international trade. The network is built on R3's open source blockchain platform, Corda. Distinct improvements to existing platforms. Sriram, I'm just going to, again, ignore that last name. Sriram, Group Head of Trade Product Management at DBS Bank, said that the bank's goal is to provide seamless end-to-end financing experience for its customers. In a quote, technology plays a monumental role in breaking down barriers in the cross-border trade and will remain key in facilitating the continued growth of international trade and businesses. This joint initiative with Marco Polo and Tech Mahindra complements DBS's efforts to help our clients unlock greater efficiencies through the digitalization of often manual and complex trade finance processes. So using blockchain is all about efficiency, right? And we're trying to one, capture value, two, increase efficiencies, because we can. Now we've got technology and we can make things more efficient. Hooray for us. Tech Mahindra is exploring blockchain. Tech Mahindra is not new to blockchain technology and has its own specialized blockchain unit. Last month, the company launched a blockchain accelerator in partnership with the government of one of India's states. The accelerator aims to foster blockchain startups that have strong real-world use cases to boost industry growth overall. This is exciting. In September 2019, the tech company partnered with American distributed ledger technology firm Adjoint to launch a blockchain financial management and insurance solution. Go India. This is cool. As India makes a splash into crypto and blockchain, we are starting to see a lot of things happen there, and that is exciting. As I read yesterday, Tim Draper is bullish on India and is interested in putting some money into the country. I don't blame him. India has become a tech powerhouse. This is laughable. It just goes to show you that most older people who have been in finance for a long time, as they get older, they seem to get stuck in their normal ways of doing business and life, and they're not really used to being disrupted very often, I guess. So anyway, this is another case of that. Cryptocurrency is a failure as currency. Cryptocurrency is a failure as a currency, says Brazil's banking chief. Right. The president of Brazilian Banking Federation, Murilo Portugal, has argued that cryptocurrencies are not really currencies at all. Well, they are. They're called currencies. Anyway, Portugal was speaking in a debate about the impact of digital revolution on the financial system at the non-profit think tank, the Fernando Henrique Cardoso Foundation. The debate examined the impact of new technologies on financial services, including blockchain, cryptocurrency, big data, artificial intelligence, and fintech. Portugal argued that cryptocurrencies do not fulfill any of the classic functions of the currency, and said they are not a unit of account or means of exchange or a store of value. I guess he's never used them before. They're actually called coins, but they're not coins. Clearly, they're not coins, obviously, which is why it's a cryptocurrency. Obviously, again, well done. Good observations. They do not fulfill any of the classic functions of currency, which is to serve as an account unit where people can express prices. Well, on the screen right here, we have an account unit expressing price in Bitcoin and USD down here in this lower right corner. Anyway, they do not serve as means of payment and a store of value because the volatility is very high. Okay, that point is valid. However, we're still so early. We're so early in the space, so early. And so, again, as it becomes more adopted, as institutions start picking it up, as it becomes a world reserve currency, as it kind of hits a saturation point of everybody who will try it out, who will adopt it, it will become more stable. Right now, it's you have this massive adoption period where people are trying it out, they're getting scared, they're selling it out, they're kind of dipping their toes in it, then it goes down a little bit, and people sell and get scared, and then blah, blah, blah. So yeah, obviously there's going to be volatility, but this is where we have a good opportunity as well. Portugal is a respected figure in the financial world, dinosaur. He has a degree in economic development from Cambridge and has served as an executive director of the World Bank and the International Monetary Fund. No wonder he doesn't like crypto. He went on to theorize that money and information are becoming one and the same, predicting that data and information will end up being regulated the same way as money. That's not a good idea. What about freedom of information? It is an experience that I think we already see happening, he said. Bitcoin is a vehicle currency in Venezuela. A report published on March 24th by the Open Money Initiative suggests that even in neighboring Venezuela, where hyperinflation is rampant, Bitcoin is not being used as a traditional store of value. The report by data scientist Matt Alborg looked at the effects of multi-day power blackout in Venezuela and its relationship to trading volume on local Bitcoins, as well as trading between Bitcoin and other South American currencies. It determined Bitcoin is being used as a vehicle currency to transfer value out of Venezuela, and that informal money transmitters are holding on to Bitcoin only as long as necessary and converting it as soon as possible to dollars or stablecoins. The report stated Bitcoin is being used not as a store of value endpoint, but as a channel on the road to obtain more stable currencies such as US dollar, Colombian peso, Chinese yuan, and various stable coins. However, Alborg concluded that this is an incredibly valuable use case for Bitcoin, and I agree. Being able to get around Yeah, I mean, just that, even though that is a high velocity of money with Bitcoin being used in and out, it is still an incredibly valid use case. When you have currency controls on places like China, where you're only allowed, or even here where I am in Thailand, you can only bring out a very, very small amount of money out of the country. I even had someone tell me that they had deposited a bunch of money in a bank. They didn't need it to be here anymore. They tried to get it out, and it was damn near impossible. So it's much easier to do when you can just send it to anywhere you want in the world from your digital wallet. Also, when you need to get out of a local currency that you're paid in and to something more stable, as in the case here in Venezuela. Is Bitcoin a store of value or a form of money? Well, could be both. Bitcoin's ability to serve as a currency is hotly debated. Some argue that Bitcoin is a digital gold, including the Grayscale Bitcoin Trust, who launched an advertising campaign around the concept. In a blog post published in February, U.S. exchange Coinbase argued that Bitcoin is a store of value to rival gold in the digital age. Cointelegraph's Antonio Madeira explored the question in an article in late February. He spoke to Antonio Trenchev, managing partner of crypto banking app Nexo, who argued Bitcoin is a store of value. He quoted, "The very early narrative of Bitcoin was that it was going to be a revolutionary currency and P2P payment system. I think that has failed to materialize in any way. Bitcoin has the functionalities of a currency, but is used more as a store of value and transition of value, especially in larger quantities." Madeira wrote that Bitcoin exhibits 5 of the 6 features of money: durability, portability, divisibility, uniformity, limited supply. However, he concluded that it is currently failing on the 6th, which is general acceptability as a payment method. And that is true. Not a lot of people take Bitcoin right now. That is an infrastructure play. That is about infrastructure. And actually, a lot of people don't take directly Bitcoin, but you can spend Bitcoin pretty much anywhere in the world if you want to use one of these things, like one of these crypto payment cards or whatever. However, that's not the way that we should be spending it. As infrastructure gets built up, and my feeling is that will happen through the central bank digital currencies, the digital yuan, Facebook's Libra. Infrastructure for things just like Visa and MasterCard will develop with these centralized private permission blockchains. And then it'll give us infrastructure for Bitcoin, because we're going to be using the same types of ways to pay with those things versus Bitcoin or any other decentralized currency. This is interesting. So yesterday, Bitcoin mining difficulty post second biggest percentage drop in its history. The key measure of competition among Bitcoin miners just dropped by almost 16%, the second largest decline in network's history. This drop in so-called mining difficulty signals some miners have bowed out of the ongoing race to solve the math problems to win freshly minted Bitcoin, as a decline in the cryptocurrency's price has made the activity less profitable. That said, the drop could work in favor of those who have chosen to stay in the game, as less competition means individual miners would gain bigger cut in Bitcoin's daily mining output. So those of you who don't know how Bitcoin mining works, basically the Bitcoin network will have some extremely difficult math problem to solve. But it's not an obvious math problem that you can just plug into a calculator. It's basically something that is not known, and these computers just try to guess the answer to it. And they're guessing at hundreds of thousands, millions of guesses per second. And whoever guesses the answer to the math problem correctly gets the block reward. Right now it's 12.5 Bitcoins approximately every 10 minutes, and in May it'll drop down to 6.75 Bitcoin. Wait, is that right? No, 6.25, sorry, Bitcoin every 10 minutes. The world's largest blockchain network by market capitalization adjusted its mining difficulty around 3 UTC on March 26th to 13.91 trillion, down from 16.55 T. I think that's terahash, but I'm not sure. In the previous cycle reported on March 9th. 2 weeks ago, Bitcoin suffered the worst sell-off in 7 years, and it has only partially recovered since. Mining requires powerful specialized computers that consume copious amounts of electricity, and these businesses typically pay those hefty bills by selling or borrowing against their Bitcoin. The price drop has erased all gains in Bitcoin's computing power from the last 3 months, pushing it back to the level seen around December 20th. The situation was weighing especially on mining operations, that have been running with older equipment such as Bitmain's Antminer S9 and other equivalent models. The third biggest drop in Bitcoin mining difficulty was 15.13% recorded on December 2018 amid a price crash at the time. Largest difficulty percentage drop in Bitcoin's history dates back to October 2011. So the next thing just goes on to talk about how the Bitcoin difficulty adjusts every 2016 blocks. The Bitcoin network wants to solve a block or complete a block every 10 minutes. That's what it wants to do. When you have more computers who are trying to guess the answer to this math problem, when more and more come online, that's more of these guys trying to guess, which means you're more likely to get the answer sooner. So maybe if there's a lot of hash power coming, a lot of miners, maybe they are solving this block reward problem in, I don't know, like 8 minutes, 9 minutes. If that's the case, then the Bitcoin difficulty level is too easy. And then on approximately every 2 weeks, it'll adjust it, and it wants to be 10 minutes. So it'll make the difficulty more difficult. If it is taking on average 11, 12, 13 minutes and in order to solve the block reward, then it will make it more easy. So the difficulty went down, and because it was taking more than 10 minutes to solve this block reward, and that's kind of how it works. What this means is that now we had miners dropping offline because the difficulty was too difficult and it was not profitable for miners. So now it's dropped down, and miners will be turning their machines back on again because it will be easier and they will take a bigger piece of the pie. I don't think this has a direct correlation to the price of Bitcoin. And in 2 weeks it'll adjust again, and then miners will either come online or go offline or whatever. But we have a lot more mining farms setting up around the world, including the one I talked about yesterday from Layer 1 Technologies. Anyway, moving on. This is kind of cool. Ton community. No one can prevent the launch of Ton. That is a decentralized kind of statement. I do enjoy that. Developers of the Ton blockchain are still considering deployment despite injunctive ruling by the U.S. court. Fedor Skurutov, spokesperson for TCF, the organization behind the Ton blockchain, told Cointelegraph that the recent unfavorable decisions by the U.S. court did not catch them by surprise. The community was ready for this or another scenario. We have several options, including launch of the Ton by TCF, the Ton Community Foundation. I will say more. No one can prevent the launch of Ton by any other entity, person, or community, because Ton is a decentralized open source solution. Already there are 2 different test networks, and within the community there is at least one group planning to launch. So this is awesome. Go Telegram. So Telegram has an interesting history. Actually, the guy who developed Telegram, his name is down here, I forget what it is, Pavel Durov. He also created this Facebook-like social media platform in Russia called VK, and I don't know but the Russian government did not like it, and they tried to get him to stop it, I believe, or they did shut it down, and then he invented Telegram. They didn't like that either, and so he basically escaped Russia and launched it anyway and gave a big middle finger to Russia. And so this guy has been known to kind of disrupt, which is awesome. And I love this response of basically saying, well, you're the United States, and you can I guess try to block or create an injunction against our original entity, but we could just fork it, become another entity, and we'll launch it anyway, and just probably ignore the United States. It does say here that they are negotiating with the investors. It says like TCF believes that they can bypass the SEC and the U.S. courts by forking Ton's mainnet. By doing this, the blockchain would legally decoupled from the original project. In the event of this occurring, original investors may have to settle for the assets issued on this forked network instead. It's not that big of a deal. It's going to be the exact same network, and the other one won't launch, so it's literally just identical. Anyway, like that's cool. This is actually makes me very, very excited and happy because I love decentralization. Go decentralization. Yes, nice. So Boring stuff. Okay. CFTC, Chief Digital Dollar Initiative, adds 22 new advisors, will release white paper in the next 2 months. Crypto Dad, Christopher Giancarlo, Digital Dollar Initiative, has named 22 new advisory members, and it's set to release a white paper in the next 2 months. Giancarlo, the former chairman of the Commodity Futures Exchange Commission, first created the Digital Dollar Foundation in January 2010. The goal, according to a previous announcement, is to advocate for the creation of a portable digital dollar that can be sent as easily as a text. IT giant Accenture is acting as the project's lead architect to technology innovation partner, and the business advisory firm FTI Consulting is providing the foundation with strategic communication support. According to the latest announcement by the Digital Dollar Foundation, the nonprofit now has a total of 25 advisory members ranging from business people and technology experts to educators and former regulators. The list includes Lawrence Rufrano, former regulator at the Federal Reserve Board, Ramon Martin Chavez, former Goldman Sachs executive, and Accenture managing director Valerie Abend. The foundation just held its first official stakeholder meeting following the appointment of the new advisors. Its next step is to release a white paper in the next 2 months to elaborate on core elements and the value proposition of the digital dollar. Notably, the U.S. Congress recently contemplated using a digital dollar to offer American stimulus packages or payments. Although the provision was later stripped from its coronavirus economic stimulus bill, Giancarlo believes it is still an encouraging development. A separate bill advanced by the House Financial Services Committee retains the digital dollar language, and Ohio Senator Sherrod Brown has put forward a digital dollar measure and as a standalone bill in the U.S. Senate. Recent congressional exploration of digital dollar highlights the importance of upgrading architecture of USD to a digital 21st century, he said in a Thursday tweet. Okay, so I knew this has been coming for a long, long time. It is obvious. Actually, I don't know, when was the Zeitgeist made? Like 2007 or something like that, or I don't know. But basically, it makes sense to have a digital dollar from a government perspective. It is all about control and supervision and making sure that they have complete control of your financial finances, actually. So goodbye financial freedom. And this is a very dystopian, scary kind of idea. It is going to be on a private permission blockchain, essentially digital ledger, and they will be able to turn on and off your wallets as they see fit. So if you owe some money, they will take it right out of your wallets. If you've done something they don't like, they will cut off your funds. It will make it nearly impossible to do anything that they think is bad, even though you might think it's ethically correct. Yep, I am a big, well, I don't like this. Okay, U.S. says Venezuelan President Maduro hid massive drug ring proceeds in crypto. Well done, Maduro. I mean, that's kind of cool. Venezuelan President Nicolas Maduro tapped crypto to conceal transactions related to illicit drug running, the U.S. Department of Justice alleged in an indictment Thursday. The sweeping charges against Maduro and 14 other Venezuelan officials are primarily targeted at stopping an alleged multi-billion-dollar cocaine trafficking ring the Department of Justice claimed wreaked havoc on American communities for over 20 years. It's allegedly involved drug runners, Colombian revolutionaries, and narco-terrorism. So we know that the CIA has been involved in drug running as well, and this whole war on drugs is bullshit. So anyway, what a great use case for crypto, right? Now, Maduro probably didn't understand operational security, probably didn't understand how to, properly protect any type of paper trail, because we all know Bitcoin is not, it's pseudonymous, it's not actually anonymous, with companies like Chainalysis and things, be able to track your transactions and actually kind of trace who you are. But if Maduro had used maybe some better operational security and some VPNs and something like Monero, probably would not have had paper trails back to him. But anyway, Venezuela's crypto superintendent, Joselet Ramirez Camacho, 33, was also indicted in a separate action on the Southern District of New York. In the indictment's accompanying press release, Homeland Security Investigations Acting Executive Associate Director Alyssa D. Erich said that a conspiracy used crypto to cloak their alleged crimes. Today's announcement highlights HSI's global reach and commitment to aggressively identify, target, and investigate individuals who violate U.S. laws, exploit financial systems, and hide behind cryptocurrency to further their illicit criminal activity. Let the indictment be a reminder that no one is above the law, not even powerful political officials, except for the U.S. banks and other U.S. officials that break the law all the time and just get little fines. This is an indictment, and if you were a bank and you were laundering money and you're involved with cartels, you would just get a fine at a fraction of the cost of the money that you made. The release does not name what cryptocurrency was involved, obviously. However, Venezuela notably maintains an oil-backed cryptocurrency called the Petro. That project is regulated by Venezuela's National Superintendent for the Crypto Assets and Related Activities, SUNACRIP. So I actually met the guys that were working on the Petro when I was in Moscow at a conference, and they were really nice, actually. And I'm not sure, I highly doubt, well, actually, let me take that back. I don't think that the Petro was used. I think that, I don't know. Anyway, that's just speculation, I'm not sure. But anyway, good try, Maduro, and better luck next time, I guess. Also, not really sure how the U.S. plans to indict the president of Venezuela in a New York court. Are they going to then go march down there with a couple of police and try to arrest the president of another country with his army and start a war? I am curious how they plan on pulling that one off. Next up, Binance is in the news. Binance to launch a Bitcoin and BNB-based debit card. I am very surprised at this. I just figured that Binance already had this before because everyone else does. But anyway, like if you want to, if you love Binance and you want to go use them like a bank, and well, like most people just do keep their Bitcoin or crypto on Binance, although you should not your keys, not your crypto, right? The leading cryptocurrency exchange by volume, Binance will soon release a cryptocurrency debit card, dubbed Binance Card. It will allow users to fund it via a designated app and make payments to over 46 million merchants with Bitcoin and BNB. Binance Card to launch soon. The popular cryptocurrency exchange announced its newest product earlier today. Binance Card's mission is to eliminate the necessity to convert digital assets into fiat to make simple payments. No longer will you need to sell your crypto to pay bills. With the Binance Card, you can keep hodling and spend only what you need to make payments. Users will be able to fund the card with Bitcoin and BNB or Binance Coin through a new application called Binance Card app. According to the announcement, it will be easy to use as transferring BNB from one wallet to another. The app will also allow keeping track of spendings and managing funds. Ooh, neat. The Binance Card is only available in a virtual beta version at the time of writing. However, Binance users can order one from the app, and once the physical card is issued, it will be sent to the customer. The announcement informed that Binance would not charge a monthly or annual fees, thank God, to order the card initially. However, there's a one-time cost of $15 payable when completing the first top-up from cryptocurrency wallet to the Binance Card balance. I wonder if there's going to be any type of like staking mechanisms like Crypto.com has on their payment cards. They have a really cool thing. Obviously not sponsored. I have no followers, so that would be silly anyway. But anyway, they have a really cool thing, Crypto.com, where like you can stake some MCO and get different benefits on different like levels of cards. And acts in a similar way, but like you can get free airline lounges or Netflix or Spotify paid for, or turn certain percentages back on your spending and blah blah blah. So anyway, it's kind of cool. Binance Card comes after collaboration with American multinational finance service giant Visa. Therefore, more than 46 million online and offline merchants will accept it in 200 regions and territories. Binance CEO CZ or Changpeng Zhao outlined that a regular cryptocurrency payment lacked in terms of adoption, but the innovative card should simplify the process. Payments is an obvious use case for crypto, yet adoption is slow. With only 0.1% of people having crypto, merchants have no incentive to accept it, and with few merchants accepting it, less users use it for payments. A chicken and egg problem. Now by using the Binance card, merchants continue to receive fiat, and the users pay in crypto they choose. Problem solved. Well, I don't think that's actually a problem solved. I don't think people are not spending crypto because it's difficult to spend so much. I think they're not spending crypto because well, it used to be, Bitcoin used to be $20,000, and now it is like $6,500. It is painful if you're a hodler like CC's claiming here to spend your Bitcoin when you know it's worth so much more. And if you can hold on to it and spend your shitty fiat, then you probably will. Yep. Anyway. And last up, blockchain-related VC deals move from U.S. to China. Research says. Well, this is interesting. So yesterday my video was on U.S. versus China war on currencies, basically, and we have the trade war and blah, 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 and this is just proving that, like, well, you know, China, not bad. Not bad. New York-based research firm CB Insights, which relies on artificial intelligence for analyzing data on private companies, found out that venture capitalists rapidly started pouring money into blockchain-related Chinese startups in its freshly published report. In 2019, China was responsible for 22% of all VC deals, compared to a minuscule 2% in 2015. In sharp contrast to that, the US share declined from 51% to 31% over the same time period. Well, that is a shame. China bets big on blockchain. The fact that VC deals are rapidly moving to China comes to no surprise, since it's clearly shaping up to be a new world leader in blockchain. Like, this is what's super disappointing about the United States. This is why I left. 2 years ago, a little bit, actually it was more like 3.5 years ago, I kind of left the States. The first year I was just traveling around from conference to conference for crypto conferences, and then I finally settled here in Thailand. I didn't want to be in the States. They're just moving way too slow. There's way too much red tape. You see what's happening with Telegram and everything else and blah, blah, blah. Like, my advice to people when they want to be in crypto, just don't deal with the United States. There's plenty of money and plenty of interest and plenty of people around the rest of the world. And we can see here that people are just leaving. When jurisdictions become unfavorable, people just pack up and leave. You know, there's a lot of other beautiful places in the world, like a lot. And a lot of places with better quality of life. Like, I'm in Thailand, and it's amazing. Everything's cheaper, people are friendlier, things are nicer, the government is is doing more things. They actually the first government to create a framework for STOs and ICOs, you know, fairly blockchain friendly, tax friendly, human friendly, everything like that. So yeah, if you want some information about Thailand, I'd be happy to answer any questions about that. Anyway, and then I hate this thing at the bottom. I'm not even going to go into it. Because it's not something that I really support, but it's this argument. I'll talk about it for a second. Blockchain, not Bitcoin, or the argument will also be blockchain, not crypto. So what that means is that the people want blockchain, private permissioned enterprise blockchain. They don't want cryptocurrency, which is the units of account or the incentivizing unit that is serving in decentralized blockchains in order to incentivize people to run nodes and decentralize the network. In a private permission blockchain, you don't need a cryptocurrency because the validators can be like 2 computers or a couple different partners involved, whatever, and they all just run nodes, and it's not decentralized at all. And if they want to make a change, you know, they just call each other up and say, hey, you want to make a change? And then they say yes, and then they just do it. So it's not, it doesn't at all, it's not trusted, it's not transparent, it's not immutable, it's not public, it's not open source, it's fairly boring. It's like a better QuickBooks, but it is what it is. Anyway, guys, thank you for your time, and subscribe, that would be nice, and I'll see you tomorrow. Cheers.